Welcome to the show. You're listening to The Ecosystem, where we talk with the world's most exceptional entrepreneurs, investors, and emerging growth companies who are all making a difference in the world. The purpose is to be educated, spark a thought, and understand how the ecosystem all work together. All of this brought to you by the team at Fund. This is your host, RJ Pahura, and my guest today is Cayse Llorens. Cayse is the managing partner at Brockhurst Capital Partners, a lower middle market focused private equity fund. Prior to founding Brockhurst, Cayse was a venture capital investor at Detroit Ventures, OCA Ventures, and Hyde Park Venture Partners. Before he began investing in great entrepreneurs and companies, he participated in 3 investor-backed exits, serving as a software engineer and a team lead, the $240 million IPO of R1RCM, the $1.8 billion acquisition of Coyote Logistics by UPS, and the $400 million acquisition by BSwift by Aetna. Cayse is also the founder and former CEO of Celeb Tango, a live celebrity video chat company. On the academic side, Cayse graduated summa cum laude in computer engineering at the University of Illinois, Champaign, and received his MBA with honors at the University of Chicago Booth School of Business. For more information, check out fundecosystem.com. Now let's give it up for Cayse Llorens. This is going to be fun. Cayse is an old friend of mine, a Chicago Booth guy. There's some rivalry there with the Kellogg thing, right? The Machine Learning Venture Capital Summit, and now entrepreneur running a search fund. So welcome, Cayse.
Thanks.
If we could just go right into it, Cayse. If you don't mind, just telling us a little bit more about your background, and then sort of how you got to where you're at today.
Oh boy, let's start at the present and work our way backwards. How's that? So as you mentioned, graduated from Booth not too long ago. Launched a search fund, which I'm sure we'll dive into more of the details on in a second. And prior to that, spent some time the last couple years as a venture investor, seed through Series A, actually pre-seed through Series B, including follow-ons and co-investments and things like that.
You were at a few places.
Yeah, so I started at Hyde Park Venture Partners as a junior member over there. Spent some time at OCA Ventures. For those that are unfamiliar, those are both prominent funds in Chicago. And then spent all of last year at Detroit Ventures, investing around the state of Michigan.
Awesome.
Yeah. And so before all that, let's see, various visits in the entrepreneurial category and software engineer, computer engineer, just basically business and technology in various ways, shapes, and forms over the years.
You have a very broad background. So how did you get, or what interested you in getting into venture capital? Yeah,
so, I guess it starts with my love of technology. So, when I was in high school, I guess some of your listeners will probably remember the TI-82, TI-85 Texas Instruments calculators. So I started, teaching myself assembly on the calculator, doing binomial expansions in math class, took that to the computer, taught myself how to program, did summa cum laude in computer engineering in Urbana-Champaign, worked as a software engineer, did that for a number of years and a couple entrepreneurial things along the path there, but basically got to the point that I said, how do you combine business and technology and really move the needle? And so as a practicing software engineer, you kind of start to feel after a number of years, we're building the same thing with different names, different technologies. And so I got to the point that I said, how can I invest in people that are creating real value in the real world? And it's not about the new web development framework or the Twilio API or something like this, but how are you actually solving customer problems? And so that took me into solving problems as a person who invests in bright entrepreneurs who are solving problems. And then we can come full circle from there to how I got into search funds, which are basically me saying I want to make the right investment and then step in as entrepreneur. So it's investor plus entrepreneur now.
Awesome. So then from the VC side, it's interesting. I think you and I kind of hit it off from what we do at the conferences with Fund. It seemed very similar in that what you were doing with Chicago Booth, with the Machine Learning Venture Capital Summit, which was a very big hit from its inception here in Chicago. You want to talk a little bit more about that?
Yeah. So when I was over at Hyde Park Venture Partners, there are a couple of things that basically combined to give birth to the Chicago Machine Learning Venture Capital Summit. I really wanted to help build the brand of HPVP, let people know that, if they want to come there for investors who understand and know the right way to build a machine learning or AI-backed company. I wanted to build the brand in that way. Wanted to kind of make my mark in the booth community. And I just had met, as a software engineer myself, I met so many young, smart people who were building these great products, these great technologies, but there was just a gap between we can apply AI and can we actually create value and sell a product or a service to somebody in the actual marketplace, right? And being on the venture side, I was talking to investors and everybody agreed, the next wave of what's going to create value in business is ML and AI, leveraging data sets, changing business models. And so there were investors that already recognized this is a smart place to deploy capital over the next several years and probably forever, but refining that thesis still. So I just saw a natural opportunity to help the place that I was working, to help entrepreneurs that were looking to wrap a business model around a product or a technology, and to help investors that were saying specifically how should we invest in ML and AI, and even better yet, what are some specific companies that might exemplify that. So that all came together in the Machine Learning Venture Capital Summit. The team made it all possible. There were 35 people that were, booth students with jobs that were also volunteering on the summit, 8 teams. We partnered with fantastic folks like Fund Conference, TechNexus, Google, IBM Watson, Microsoft. We even had NASA make an impact in the second year that we just did. So that was basically bringing startups into the room with investors and sparking conversations where they may not have happened otherwise. And, we've done it twice now. And both years, the winners of the pitch competition have raised multiple rounds of funding. So if there's any KPI for success, I'd call that one of them.
Awesome. Well, congrats on that. I know it's still a big thing running here in Chicago. You just closed a big round, and I definitely want to talk about that. I want to talk about your experience through that because you've been both on the investor and now entrepreneur side, and now getting into the search fund. Before we even start there, for the audience, when you think about search funds or you say search funds, I think the terminology is used and a lot of people don't necessarily know what it is. So I took the liberty ahead of time to look at Wikipedia on it. I did know what it was before this interview, but so the Wikipedia definition is such that it's a search fund is an investment vehicle through which an entrepreneur raises funds from investors in order to acquire a company in which they wish to take an active day-to-day leadership role. In the first stage, a small group of investors back the operating managers to search for a target company to acquire. So with that definition, for those of you who know private equity, it almost sounds more like a private equity type startup play, right? So you went again from being a VC investor to sort of entrepreneur with your MLVC summit to now an investor entrepreneur that's going to be running the search fund. And again, you just raised a lot of money. So let's talk about, first, why the search fund? Why investor to entrepreneur to now a potential takeover, right?
Investor / entrepreneur.
Yeah, exactly. Always building.
Yeah. So let's see. How do I address this? There are a lot of ways to attack this. So let's start with a case study to just exemplify what that Wikipedia definition was hopefully trying to communicate. Let's say that your parent built a business that, let's say, does revenue cycle management in healthcare. So there's a hospital and they say, hey, we need help knowing what to charge our customers, our patients, and all the things that go between that and getting the money from the insurance company, right? So that's revenue cycle management. Great. So let's say RJ's mother or father starts an RCM company 20, 30 years ago. For whatever reason, it gets passed down to RJ. Now, RJ may say, this is great, but this is not what I want to do with my career. Successor issues. Where does the business go? Or the person that founded the company may have operated it for the last 40, 50 years and said, I'm ready to retire, pursue other business interests, etc. What should I do with my company? Right? So this is an actual pain point. So you think about entrepreneurship, you think about what is the pain point, who has it, how am I solving it, right? So one way to talk about this is you're taking a business that is a great business that has a history of having customers that are here to stay, a product whose value is here to stay, et cetera. And we just need to find the right home for that business. And so basically a search fund is rallying a group of investors that share a common vision around what we just discussed to empower somebody like me to go out and identify who this great business owner is, what this great business is, what industry it's in, everything surrounding a transition from the current owner to me. I come in and work with the staff. I create growth opportunities for the company. We want to grow the company. And so basically you're investing in one business that you're going to pour your heart and soul into and actually operate that business. In some situations, the owner will stick on.
So it's just one.
That's right.
Just one. Okay.
That's right. So a search fund is literally funds that you've put together to search for a company that you're going to find, acquire, and grow and take care of.
Right. And the thesis for this particular fund is to just run and operate this one business, not look at, or maybe in the future, you're going to be looking at other businesses, I'm assuming, right?
Right. So just like I've watched your magnificent career blossom over the last few years, opportunities kind of arise as time passes and who can plan for the distant future. But for sure, over the next few years, the goal is to find a great business, be a good steward of that business and the employees, and do right by the legacy of the outgoing owner.
Love it, love it. So, can you talk about what the business is that you're looking for, or is that still under the table until you find it?
So I can say this: I spend a lot of my career in the healthcare space, right?
Okay.
So, healthcare is a really interesting industry for me. It helps people if you do it right. It's about 15% of GDP, so it's a large fraction of what the country's up to.
Yep.
It's acyclical. So what does that mean for folks who may be unfamiliar with the term acyclical? What's going to happen in the boom and bust cycles of the business cycle? So in good times, when everybody has jobs and unemployment is low, how does a given business perform? In tough times where there's a recession, a bubble burst, et cetera, how does the business perform? So healthcare is great because it's acyclical. People need healthcare. People value their health. People are willing to spend money on their health in good times and in bad, right? So that's part of the thesis. There are a number of niches within healthcare that Brockhurst is looking at, and happy to follow up more one-on-one with folks that are looking for the deep dive there. But let's just say you're looking for an industry that is a great industry to enter, that's a growing industry, that is a healthy industry, a company that's a great company, great employees, great legacy, great brand in the marketplace. And you're looking for a fair deal. So you're not looking for a bargain when you invest in the company. You want a strong company, and strong companies demand fair market value.
So I can imagine on the other end, some entrepreneurs are hearing what you're saying, going, "This is my business," right? Especially if they're in healthcare. What would you advise them? Or even more specifically, what are the specifics? You mentioned, good, great brand, obviously good leadership, potentially passing it down through multiple generations of the family. Even more specifically, what are some of the things that you're looking for in that business to take on in your fund?
So I can answer this a number of ways. One is it a strong fit for me, right? So I'll be stepping in as CEO. I have a strong tech and tech investment background. So one thing I have a keen eye towards is, am I the right fit to actually run this business? And you have to be low ego and be willing to acknowledge where your strengths are. Then you and I may look at the same company and say, can we do great things with this company? And the answer may be no for one of us and yes for the other one. And the next company, those roles may flop, right? So that's one thing. Another is, so you mentioned brand. So let's say I want to buy a conference that is where people go to matchmake between investors and entrepreneurs. Let's fast forward a few years and maybe Fund Conference is off to the races and I can somehow convince you that it might make sense to transfer ownership, right? So I'm going to come to you and I'm going to say, what kind of customers do you have? Do they stick around? Are you a high churn business? So do you have lots of new customers, but also you're losing lots of existing customers? Are you in an industry that is generally growing? So 2019, 2020 may not be the year you want to buy a print magazine, for example. But it may be the year that you want to buy, back-end processing for a paper mill that's processing the wood into the wood pulp, because that may be a business that's here to stay and has lots of end markets. So there's so many of these characteristics you can look at, but in general, you want a company that the employees have a good company culture, the owner has a good brand in the marketplace, so it's a differentiated product. You don't want to race to the bottom. So like a commoditized product like pork bellies or kidney beans or something. You want to buy a company where people say they're excellent at X. They don't even do Y or Z, but they're excellent at X. So when I need X, that's the people to go to.
Very interesting. And this is a very different path, right? Like from, again, being the professional investor to entrepreneur, rather than building something, you're looking at it basically a takeover, right? I mean, in a good way, right? I mean, you're looking for businesses that are potentially struggling, that you can come in, offer some expertise, not only in the finance area, but also in operations and leadership, as a whole. So, any other reasons that, this was really applicable to you as opposed to just building something?
So let me jump in on one misconception, and I'm glad you said turnaround, because a search fund is necessarily not looking for a turnaround. There are turnaround firms that are great in that. So you identify why the business is wavering, and maybe you have a skill set in addressing that.
Right.
Search funds in particular are looking for businesses that have been profitable, that have been growing, and not at a venture growth clip, which is, large hockey stick growth year over year. Because what comes with venture is risk reward. And there's a different risk reward profile for venture deals versus a search fund deal, right? So venture, you say this is riskier, it's earlier, it's less well defined. But I believe that I understand the team, their approach, and the market they're entering well enough to think they can turn the corner and capture market share with their go-to-market strategy, et cetera, et cetera. In the search fund space, you're looking for something that is established that I believe I can add horsepower to, resources to. Does that answer the spirit of the question?
Yeah, no, absolutely. And so, in the spirit of fundraising, you just raised a big round yourself, right? Huge Congratulations.
Thank you.
It's obviously a very big deal to continue operations and always have cash on hand. So can you talk a little bit more about your fundraise? And then I'd like to go into more specifics that I'll ask you later.
Sure. So the nature of search funds is different. So search funds are not private equity, right? And this is an important bright line distinction to draw. So if I go to RJ and I say, you have this RCM company, I might like to buy it from you. And I say that I'm going to come in, cut cost, maybe streamline some employees out of the picture, and financially engineer a way to have us both make money. That may appeal to some folks, it may not. Search funds, the approach is more of a legacy, take care of the employees, and really structure something that makes the owner happy. So you mentioned takeover earlier, right? So a takeover in the positive sense of the word, or let's call it a buyout or a full acquisition, that may be of interest to some owners. So some people may say, I've done this well for 50 years. I'm ready to take chips off the table and retire to Florida, right? Other folks may say, this is my company. I built it. I'm not going anywhere. But hey, if you want to bring capital and resources to the table and take it to the next level, hey, you can be CEO, I'll be COO, but I'm not going anywhere. And that's a different type of relationship. And that can work out very well in certain circumstances. In other circumstances, you have family businesses where the owner may want to take a step back, but they want to make sure their family's taken care of. So there are so many different permutations of how you can make this happen. And to me, that's part of the excitement of finding the right fit, the right company, the right owner, getting along with that owner and having that trust. So they believe whether or not they're there legally at the table as part of the org chart, they know that I'm going to take care of their clients, their customers, et cetera.
Search funds are fairly newer.
A couple decades.
Yeah. Right. Like, so how many people do you think are actually doing this, what you're doing?
It's relatively niche, right? So I'd say when I graduated from Booth earlier this year, I knew 2 or 3 folks that were coming out doing search funds. If you look across the country, the last number I saw is 100, 200, low 100, somewhere like that. And so it's not a commonly walked path, right? So you imagine you go to a top school, Booth, Stanford, Harvard, what have you. A lot of folks graduate. Kellogg. Shame on me. Kellogg. A lot of folks graduate from these schools and they may go into banking, consulting. They may go work at Google or something like that. So I think you really, really have to want what a search fund offers. And that is the ability to find a great place where you can do great business for the next few years. So coming out of being an investor myself, a search fund is not really, I'm doing the job of an investor. A search fund is, I can see through an investor's lens to identify a great company to join, but then I'm going to take over as an operator, right? So if I think about fund conference.
Great way to put it. Great way to put it.
If I think about fund conference, if I'm RJ, would I like to invest in fund conference and watch what happens as the investor? Or would I like to grab the reins, expand to other cities, hire and motivate the team, think of the new ways we can grow the company? So that is really what you want if you go down the search fund path, or hopefully it's what you want.
Excellent. So in part of dealing with the raise, you went again on the entrepreneur side and dealt with investors raising this fund.
Mm-hmm.
Can you talk about, how much you raised and what was that process like? Everybody talks about, how painful it is to raise money. What's been your experience through this process?
Yeah, we could do a whole podcast just on this one question. Let's say this. So while the fund amounts aren't directly disclosed as such, I can say that in a search fund, most of the capital comes in when it's time to actually buy the business. So you raise a smaller fund to do the search up front, just to finance expenses, pay the bills, fly around and meet with owners and things like that, pay service providers, lawyers, finance folks to look at the deal. So you raise just enough money up front to find the business. You typically allocate a budget of a couple years to give yourself a runway to do that. So once you find the business, then you say, now we need to acquire this business. The owner may want some liquidity. They may want to stay invested in their own company, or they may want to completely cash out. When it's time to do that deal, that's when you raise the real money. And that's by design, right? Because as you know, when you raise capital, the more you de-risk anything you might want to invest in, the more favorable terms you'll have for the money you raise. So it's in everyone's best interest, investors included, frankly, to raise no more than what you need to get to where you say, I've met the owner, we believe we're going to do this transaction. And then you go to your investor group and you say, this is the deal. Let's all rally behind this deal and make this happen. So that was one aspect of your question. I think another aspect was, what were some of the challenges?
Or just what was it like? I mean, raising the amount of money, just dealing with a funnel, if you will, of investors to actually close the deal. Again, we talk about it being painful or maybe painless if you're a serial entrepreneur and you've done it successfully multiple other times. But what's it like being on the other end raising these funds?
Yeah, so I'd say it's funny because we're literally sitting at the fund conference headquarters right now, and behind RJ is a book called Sell More Faster. And
that's Amos. We just did his interview.
Shout to Amos, big fan.
Techstars. Yep.
So the name of that book, I think, is a good description for what fundraising is like, right? So you think about sales. So let me ask you a question, and I'll give you no more than 10 seconds to answer the question. What are sales? What is sales?
Product market fit, finding the buyers and the sellers and putting them together at the right time. That's my fastest answer.
And I love that. And I think that's accurate for fundraising, right? So as with most of life, when you're raising funds to do whatever investment or project you're trying to undertake, you're trying to find investors that value the same things you value, believe the same things you believe, and believe that you can execute against the aforementioned things, right? And so just like with sales, you're going to have a whole universe of people you could talk to, but you have a finite amount of time. So how do you pinpoint the right investors who are already primed to consider this exact investment or something very similar to it? And or how do you start with people that already trust you and will say, I'll take my trust and relationship with you and be willing to extend it to this project that you're talking to me about, right? And so as with all of sales, it's on some level, it's a numbers game. Excuse me. So you don't want to quickly fundraise, right? That's one lesson that I'll share. It's so important to strategically think about not just do you want to raise capital, what type of capital do you want to raise, who do you want to raise it from, and most importantly, what is their value add beyond the capital, right? So you think of a search fund, you're really putting money together to buy a great business. There's a lot of ways you can do that, right? You can go to the Small Business Administration and take an SBA loan. You can work at Amazon for a handful of years and save your money and try to finance the deal out of your own pocket. So when you choose to fundraise, you choose to say, I'm walking a tough road, right? I have to convince a lot of people of something. I have to think of that thing broadly and deeply. So when they ask me any questions, because I have to be a good steward of their capital, you have to know inside and out what you're selling. I think that's a sticking point for a lot of people too, especially people that want to raise venture capital for a venture type of road, where they might go to their friends and hear what their process was and try to apply best practices. And my friend talked to these folks about this, so I should talk to them about this. My friend talked to those folks about that, so I should talk to them about that because that resonates with that investment firm. And I kind of turn that on its head and say, meet a whole lot of people really quickly and figure out who you have this in common with. Do you want to go down this search fund path? Do you want to buy a business in the industry I'm interested in? Do you believe in my thesis that I can bring value through technology to a business that isn't necessarily a high-tech business when we enter the investment, right? And so you have to establish this common ground, like you referred to, product market fit. In this case, the product is me / what Brockhurst Capital Partners is up to, and the fit is the investor group, right? So over the course of 4 months, I kind of flew around the country to the Bay, to New York, Wall Street several times, Miami, Fort Lauderdale, just got back from Portland. And so you're taking it on your own shoulders to say, I'll do what it takes to meet enough of the right people to express this vision to, and not stop until I have the capital I believe we need to undergo the project we're trying to undergo. And hopefully that abstracts it a little bit above what a search fund is to all of entrepreneurial endeavors that seek to potentially raise capital, right?
Right. I mean, no doubt about it. Raising funds sucks, right? I mean, everybody knows that. That's done it. How did you come up to really get specific of who is going to be interested in a search fund, right? Like, I think it's one of those things where it's if you're doing molecular device, whatever in life sciences, it's going to be something that's so hyper specific to be able to find that type of investor. What advice would you give our listeners as to how to hone in their search a little bit better as an entrepreneur raising capital, right? It's like, so you're going out trying to find these investors, in your case, that are looking for this, that are willing to invest in the search fund. What advice would you give them how to hone in their search more specifically so they're not just pitching everybody that has the title investor next to their name?
I'm so glad you asked this question. So one thing to keep in mind here is, as a salesperson, time is your worst enemy. So if there are 10,000 investors you could make a list of in the United States, how much time do you have to talk to how many people, right? So right away, if you want to raise a search fund, as an example, should you talk to a venture capital investor? Should you talk to a private equity investor that's looking to do different types of private equity deals? Should you talk to an angel, a family office? I would say talk to people who have already hung a shingle and say, we want to invest in search funds. So how do you locate those people? One answer is the Booth Kellogg ETA conference, which is coming up next year, now that it just passed a week ago. There's also one at Stanford. I believe there's one at Sloan. So you go to any of these conferences, you're going to meet lots of other searchers who are in your boat, lots of investors who have already said, we invest in search funds. You can also just Google it, because it's no secret who are the people that are targeting search investments. The other thing to consider is, do you want investors that are great at what you're doing on this project? So let's say I could go to RJ and say, hey, fund conference, you're the first unicorn of 2020. RJ, do you want to back Brockhurst Capital Partners, right? Well, you may say, here's all the money you could need. Here's a blank check. I think you're a cool guy. You're off to the races. Great. You're a great guy. Thank you, RJ, for that investment. You guys heard it here first. He agreed to invest. But wouldn't it be better if I said, RJ, have you done a search fund deal before? What is your understanding of search funds? Okay, you've done 5 search deals before. Can I talk to some of the folks you've invested in just so I can see what it's like to work with you? What are some of the challenges you face as an investor? What type of people do you like to work with? What has frustrated you in previous investments so I can know what's valuable to you up front? You ask all these questions and, it's a bi-directional interview, right? People apply for any job. You're applying for an investor to hopefully share their capital with you and their resources. It's like any job. It's a bi-directional interview. And I can't stress this enough, because people can be under a lot of pressure when they're fundraising. They have time pressure, et cetera, et cetera. Psychologically, it can be demanding to go through the ups and downs of anything entrepreneurial. But you do need to take the time to say, is this person a good fit? Not just in terms of what they're excited about, but in terms of what they have experience with. And in terms of, the car test? Like, can you be in a car with somebody for a couple hours on a road trip? When I went through my investor base and selectively invited people to go on this journey with me, a big important thing to me was, when times are tough, if we're in the boardroom, is this somebody I can see having a productive, calm conversation with? And if not, can we yell at each other and get through it and be on good terms tomorrow? And these are really important things to talk about. And in fact, I'll say anybody that wants advice on this, I'd love you to look me up on LinkedIn and share, because, they don't really teach fundraising in very many places. And as entrepreneurs, we have to stick together, right? So to your other point about where should they go to get started and start meeting people and start to compile the list of investors? Well, if you want to run a marathon, who do you ask for advice from? Maybe marathon runners, right?
Runners.
You want to know what you should do when your car breaks down. I'm stranded on the side of the road. Who do you talk to? A tow company, a car enthusiast, your local repair person who's been helping you out. So you want to fundraise. Who do you talk to? People who have fundraised successfully.
Right.
And I did that a lot. I talked to over 40 people that raised a successful fund. Probably half of them before I started. And even as I continued to fundraise and felt that I was getting better at telling the narrative and gaining traction, I continued to proactively seek out other searchers that had raised and continue to learn those lessons all the way up to the very end. And now I've already turned around and offered my guidance to a lot of other folks that are coming behind me and getting to where I am today. So I think, like with anything in entrepreneurship, you go to those who have been there, done that, and want to help the next person coming.
I can't say it enough what you said about bidirectional relationships and how important that is throughout the raise, and just making sure that you jive well with the person that essentially you're getting into bed with, right? And it could be for a very long time. So what has that process been like? Did you set the terms up front, as clear as day, as to what involvement, your LPs would have in the fund, or did you want any of them to take a little bit more active role, other than being an advisory type role with you?
So great question. So the more I spoke to investors, I really, as I went, improved my checklist of questions I would just ask everybody, right? So that includes, to your point about who wants to discuss what, I always ask, what are your communication preferences? Do you want a quarterly email that's summarizing things? Do you want a phone call at midnight when when the going gets tough and you want to be the first one to help solve small problems before they get big? Do you want a board seat? How do you think about board seats? Do you like board seats? Okay, great. You like them. Do you have the capacity to meaningfully contribute if you were to join the board? So these are all these questions I ask. I ask, what kind of people do you like to work with? I ask, what kind of industries do you feel strongest in, so I can know who to ping for what? I ask, what type of functional roles do you feel strongest in? Should I ask you for tips on sales, marketing, etc.? And most importantly, I look at the whole cap table, the whole investor group, and I say, what is underrepresented and what would add value? So every time, let's say you're targeting 10 investors for whatever you're working on. You have one investor, great. What are they great at and what do you still need? Okay, fast forward, you have 9 investors. Great. What are they great at and what do you still need? And you need to ask that question the whole way through. If you really want to be able to call somebody for help in manufacturing, oil and gas, clean tech, healthcare, fintech, digging ditches, window washing, the more diversity you have among your investor group, the better odds for success you have, which is why it's so important to have these meaningful conversations up front. Because if you just say thanks for the money to the first 10 people that give it to you, what kind of team have you built? You don't even know. And I cannot underscore that enough. So, yeah.
Yeah, it's interesting that you say that too. And just information that you want to provide the investors, right, to keep that relationship good with them after you take their money. Can you talk about that? And just for the audience's sake, tell them, as an investor previously, what were some of the things that you liked getting updates on from your entrepreneurs, and, why is that important?
So there's one investment that comes to mind that was in the fintech sector that I made while I was out in Detroit. And there's a phenomenal entrepreneur. And so the managing director of my fund out there is very active in the community, very active helping entrepreneurs. So they met each other months before I even took the job, right? So when I first meet this entrepreneur, I know that she's done the extra work up front to build relationships with investors way, way in advance of looking to raise capital. Kudos to her. Fantastic move. Not enough people do that, right? And so from there, we had coffee chats a couple times. I would get more and more enthusiastic about her business. I would get the friends and family newsletter before the fundraise even started. And she would say, here's the progress we've made on proving out product market fit. Here's the progress we've made on our minimum viable product. Here's the progress we've made on prospective partnership conversations. Okay, now we've hired an engineer and they're building out the MVP. Okay, now we're starting to talk to friends and family about the first capital in. Okay, now we really want to talk about what is your advice, Mr. and Mrs. Venture Capitalist, on when is the right time to raise money. And, you know, even though I saw this process unfolding in real time as I was part of it, I still woke up one day and said, why do I love this entrepreneur so much? Why do I love this company so much? And the answer is because trust and confidence were built over the course of several months. And, you know, if you want to go down the entrepreneurial path, if you want to go down the fundraising path, you know, you really, really benefit yourself by making that decision well in advance of when you want to launch the company, or at least well in advance of when you want to raise the capital.
So it's over communicating. To a sense.
It's understanding what communications each person wants and giving them what they want.
Got it. So what's an effective way to do that without being annoying?
Right. So some investors said, so in the case of a search fund, right, I'm looking for a great business. And part of that process is looking at a lot of businesses. And so, you know, investors want to see that you're looking at a lot of quality businesses. And so some have said, just send us a summary that says, I'm looking in this sector, this many companies. I said I was going to do a geographically agnostic search for a great business. Here's evidence that I'm looking all across the country. I said that we were going to try to invest this much money in the company that we buy. Here's evidence that I'm staying in that, you know, quantitative range of the type of deal we're trying to do. So, and then when you say, here's this great revenue cycle management company, here's this great pet care company, here's this great whatever it is company. As you're looking at these companies and giving them your opinion of them, they start to understand how you think as an investor. So then when it gets time to say, okay, this is the company that I see myself joining over the next several years if the CEO will have me, right? Then they say, great, we've built so much confidence in how you analyze industries, deals, companies, how you think of the pros and cons. You've been forthcoming with the risks of different opportunities and not just overselling and trying to sweep the risks under the rug. You build that confidence in advance through these different mechanisms, right? And so I'm really big on personalizing things to the people. So I have in my CRM, hopefully your listeners know what a CRM is, customer relationship management system. So basically keeping track of the people you're looking to talk to, the relationship you have, your next action items, things like that. I can do exports from my CRM system that are automated and tailored to different investor preferences. So I put a lot of time into building the technology out up front. So I can click a button and send somebody a visual and a tabular format of these are the companies by industry, by date, by geography, and give no more information than they already told me they want. And most importantly, different people value different KPIs. So one investor may want to know, how many owners did you talk to this month? Another may want to know, how many letters of intent did you sign this month? Another may want to know, how many times did you feel it was worth it to fly to somebody's city and take them out for coffee? Because that's an indication that I feel it's worth my time to pursue, right? So different people value different metrics. And I asked all these things up front when I was meeting with people for the first time.
Love it. So you actually gave me a thought, start to close. So inception to money in the bank. What did that look like for you? And maybe, you know, you don't have to say the investor name, but, or the LP name, but, from your initial outreach point, how did that start? And what was the process then to get it to a close? Maybe if you don't mind just taking a minute to tell us that.
So are we zooming in on an individual investor level?
Sure. Yeah. I mean, individual, just generally speaking, I think a lot of the times entrepreneurs just want to kind of tell their entire life story in an email and then attach a 30 or 50 page deck. And, you know, they expect the investor to come back on the other end and go, this is the best thing I've ever heard. Right. Mm-hmm. To their surprise, they never respond whatsoever. Right. So what was the tipping point that got the investors to reply to you, take the meeting, go through diligence, and then actually close on the investment?
So we discussed how the search fund space is a relatively smaller, close-knit community, right? And so it's entirely feasible to say, I want to meet these 30 investors, but I'd love to hear what the experience is like receiving their investment. You can go talk to 10, 15, 20 different searchers that raise capital from these folks. You can Google your way to them, find them online, meet them at a conference, et cetera, et cetera. And then you can say, this person and I have built a relationship, and they trust me now. I trust them. I trust their opinion of their investors. They trust my approach and my skill set. And whether they introduce me to their investor or not as a result of building that relationship, at very least, when I reach out to that investor directly, I can say, I've spoken with RJ, you backed RJ, you invested in Fund Conference, and he sings your praises. He says you've been a stand-up person in good times and in tough. You've been there. You've been a value add beyond the capital. So a great way to do this is meet folks that have worked with investors, build that relationship, and then you can have a more expedited fundraising process when you already know people, right? So that was a big part of how I started. And then it's, let me just send an email and say, hey, it was great talking to you a couple of weeks ago. Here's my PPM. The PPM stands for Private Placement Memorandum, which is basically your pitch deck when you're fundraising for a fund. Here's my PPM. We already know each other. I love to talk about the specifics of the project now that we kind of know that we're moving in the right direction. You send that email, you have a phone call or 2 or 3 or 4, usually with more and more people on the call each time, usually with more and more senior people on the call each time. And I typically wrapped up my process with flying out to meet them in person because, of course, you want to meet somebody in real life that you're going to be in business with for the next handful of years. And in all cases, following up with, professional follow-up emails. And, it really didn't feel like selling. When I started out fundraising, I was really intent on, am I telling the right story the right way? And as I got near the end, it really became, this is the project. Let's just discuss who we are as people and what the project is. And is there legitimately alignment, right?
So it wasn't an immediate close. You're saying it took a few meetings.
So I did get lucky 2 or 3 times. And on the first conversation, investors said, this is great. Even in those situations, I typically circled back for a second or third conversation. Just to make sure that we had a chance to cover all of the different talking points that would really let us get to know each other. But I would typically say, unless you already have a deep relationship with somebody, you don't want to go in for the kill too quickly, right? I mean, imagine you're CEO of Fund Conference, you're a billionaire, and somebody off the street sends you an email and says, I love conferences, I love Fund Conference. Can you give me $1 million for this project I'm working on, right? That would just be much more comfortable if you had gotten to know each other first. You know them, you know the circles they move in, and you know that you can trust them with an investment. So I think something that, I'll beat a dead horse here. Build trust and then talk about business.
Yeah. Which can take a while.
It can.
How long did your fundraise take total?
About 4 months.
Okay.
So which
is fairly quick.
That's pretty accelerated by most standards.
Yeah.
And I leaned heavily on relationships. So I had the benefit of having a good amount of relationships that were pertinent going into the raise. So I started out by saying, who do I know and trust that already knows and trusts me? And are there inroads that I can create into this community to kind of accelerate the process? But had I not been able to pull that lever, I would have slowed down and done it the slower way that would have been the right way. Right.
Yeah. What are you most excited about right now in technology or investing and obviously maybe even the businesses that you're looking at?
What a tough question to take from the broad to the narrow. Let me think here. For one, I'm excited about Fund Conference. I really am.
Thanks, man.
I've seen, when we started out with our summits, you were growing Fund Conference, still are. I was growing the Machine Learning Venture Capital Summit, still am, from afar as managing director now. And I get really excited when there are just new meeting places where new ideas can spark and new people can meet each other and say, hey, I thought I had connected the dots, but you're a new dot, and now I can connect them in this much better way. And so I think Fund Conference delivers on that. SaaStr, South by Southwest, anywhere where you can go and meet like-minded people really excites me. Because when I work on an investment thesis, when I say what industry do I like, what companies do I like, what industry dynamics do I like in terms of new technologies that can disrupt business models and things like this, you can only do so much research behind a computer, right? You really have to get out into the real world. That's how I was able to fundraise. That's how I was able to build the team that we're running with at Brockhurst Capital Partners today. And I'm sure that was a huge part of the success of Fund Conference, right?
Yep.
And so that to me is big, just sparking new interactions. And if you can't make it to an event that is an event of choice, then you can look for an association and find an association head online and say, hey, I missed your conference, but I really value your expertise. Can we just chat? And so there's a lot of ways to approach this.
That's awesome. Just sort of in closing, what's something that's fun about you that people might not know?
Well, let's see. I don't know if it's common knowledge that I like to electric longboard. Have you ever been electric longboarding?
Longboard, no.
Yeah. Have you been snowboarding?
I have.
So
I'm more of a skier, though.
Yeah, me too, actually. So snowboarding, for the listeners who may not know, let's say that you're looking straight and your board is long and goes out to the left of you and to the right of you, right? Just like a surfboard, a snowboard. So you lean forward to aim to steer the board right. You lean backwards to steer the board left. Okay, this is not rocket science, right? But when you have an electric longboard, strap a motor to it that goes 20 miles an hour and can go for 20 miles. So I bought my first one a few years ago, and now the boosted board and a lot of other boards are popular. But it sure is great to go along Lakeshore Drive and just zip up to Navy Pier and carve the concrete like it's the water or the snow.
I love it. I'm going to have to check that out. I'm big into those things. So, well, hey, thank you for being a part of this case. Huge congrats on your capital raise, man.
Thank you so much.
Amazing. And, best of luck with what you're going to do with it in the search fund. And for those who want to get in touch with Cayse, you don't have to give your phone number, but how can they reach you?
Yeah, so LinkedIn is really the best way. So at Cayse Llorens, that's Twitter. LinkedIn is, what is it? LinkedIn.com/n/Cayse Llorens. So you'll see how to spell my name on the podcast. It's CAYSELLORENS. And just hit me up. Happy to help out.
Awesome.
Any fellow entrepreneur. Oh, can I squeeze in one last point?
Absolutely. Go for it, man.
I forgot to say, the congratulations don't come when you raise the capital, but when you do something with it.
True.
So I'll end on that.
Awesome. Well, thanks for being a part of it, Cayse.
All right. Thanks so much, RJ.
All right. You're listening to The Ecosystem, where we talk with the world's most exceptional entrepreneurs, investors, and emerging growth companies who are all making a difference in the world. This is your host, RJ Pajuro, with my special guest today, Cayse Llorens. For more information, go to fundecosystem.com. Thanks for listening. Until next time, folks.